Joining me with a further analysis on trade at midday is Reko Nare from Anchor Capital. Reko, hi, it's good to chat to you once again. Now, as you've just seen there, the oil share doing very well today, the rand doing very well, the general picture is looking quite rosy.
Hi, Ray. Thanks so much for having me. It's great to be on the show. I think, as you just opened up very well, it's a very constructive picture out of the JSE today. You know, the JSE opening up about 0.8% this morning and then pushing to about 1%. But I will say, Ray, it's all been a resource story. Resources continuing that rally from 2025 into 2026. And of course, that's been mainly focused around the gold counters as well as the PGM counters. And yeah, I think that's why you saw on that 3% increase that you saw within resource counters, you then see our JSE playing well as the rand. You know, you did open up your discussion by chatting about it, rand strengthening to about 16 or well below or about below 16 rand to the US dollar, 16 rand to the US dollar. That's about the best level since June 2022, in fact, Ray. And that's been supported by, once again, that record gold price that we've seen. You mentioned right at the open of the show, along with a weaker US dollar. So all of that is counted for the rand, strengthening by about 3% year to date. And then, when we look at our commodity plays, you already touched on it, but, that strength within the gold players, the strength within the commodity counters, that continues, and that continues to be underpinned and underpin the performance that we've seen within the overarching equity players, as well as the currency supports that we're seeing there. Gold above $5,000 an ounce, silver hitting a new record, and then of course PGMs, up about 3.5% today. So all of that is, well leveraged for South Africa, and South Africa is kind of really well leveraged to play within this commodity cycle that we're seeing playing out right now.
Yeah, it's not a blue Monday for South Africa. It's a great Monday, actually. Smiles all round. Now, Cashbuild, momentum clearly slowing a little bit there. What are your thoughts on Cashbuild?
Yeah, Ray. So look, that was a second quarter, financial year 2026 operational update that we received out of Cashbuild this morning. I think, as you said, you've got momentum clearly slowing, group revenue up about 1%, and then SA like-for-like sales slipping into negative territory. So obviously that doesn't paint a very positive picture. At the core SA business looks to be stalling from where we're looking, and you can't see a lot of pricing power here. Selling inflation only 0.8%. So yeah, basically what it means, Ray, is that customers are spending less per visit, which is of course not very constructive for the business and of course for the share price. But yeah, I think from our side, we were currently sitting, on a valuation, level, you're looking at about a 14 to 15 times forward PE, with full year consensus 2026 growth now at risk. So I think, look, from our side, from a valuation perspective, valuation looks full. And then, of course, you've got some execution risk playing out here.
Yeah. Right, Pan-African Resources, something going the other way as well, enjoying the party at the moment, if I can put it to you that way.
Yeah, as you said, right at the open of the show, gold production that is up 51%. This was a first half of 2026 update. Essentially, what you saw is production up 51%. Basically, what it means is that you've had a meaningful step change in keeping up with full year guidance. That's very much on track. You've got the balance sheet rapidly improving. You've got net debt down 65%, and which basically means that they're going to be net cash positive by about February 2026. So all of that paints a relatively constructive picture. And essentially how it summarizes, I'd say, you've got a fully unhedged exposure towards the gold price here. And that's, of course, driving that cash generation that we're seeing play out here.
Yeah. Right, Reko, tell us about Anchor's top calls for 2026. I mean, this is interesting what you've just been saying as well, but what are you guys looking at over the next 12 months?
Yeah, right. So I'll probably start off by just painting the picture of the macros, the way the macroeconomic backdrop is relatively constructive for SA equity and SA Inc. As a whole going into 2026. So essentially, as Anchor, as a house, we are expecting about a 12% total return for the South African equity market. That's over the next 12 months. A lot of that is underpinned by, the earnings momentum that we're seeing play out. We think that that's relatively supportive. And we think that's relatively supportive to specifically the resource counters as well as the banks, alongside, improving domestic conditions. If I think about the fact that you've got inflation that's been easing, if you've got, a constructive rates outlook, you've got improved logistics, Transnet seems to be finding its feet. You've had kind of a more constructive energy and power generation, with Eskom. So all of that, paints a very
all comes
positive
quite
picture,
nicely.
for the SA equity background.
Yeah, right. Your stock pick, a quick one in a nutshell. What are you looking at?
Yeah, right. So I'm going to go with Pepkor, PPH on the JSE. You've got 6,000 stores here. You've got strong scale advantages. You've got a consistent market share, and then of course you've got the optionality that comes with the bank that they're looking to put online. And then of course you've got other parts of the business as far as credit, fintech, and services. And then from our side, from an HEPS perspective, we've got HEPS growing at about 15% HEPS growth for the next 2 years. So that's PPH on the JSE.
Lovely, Reko. Thank you so much. We do appreciate you taking the time on this lovely Monday. Thank you. That was Reko Nare from Anchor Capital.